I'm so honored to be here today for our third ever Creator Business Bootcamp webinar. Today's topic is on creator personal finance and taxes, especially since tax season here in the US is right around the corner. I don't know about you all. I feel a little anxiety about it, and I'm hoping that this will maybe alleviate that for some of you if you are feeling that way, because knowledge is power, and you will be well equipped after we speak with today's incredible experts, who I'm going to introduce here in a second. But before we dive into that, there are a couple of housekeeping items I just want to share with you, get that out of the way, and get right into the good stuff. So first and foremost, we are going to have a live Q&A at the end of today's webinar. So please stick around, especially if you have a question that you would like to pose to our panelists. And we are recording today's session. So it will be posted to our website in probably about 2 weeks. So keep your eye out for that. And that means that you can revisit this conversation if you want to refresh your memory, or if you'd like to share it with another creator friend or somebody else in your network. A very important note is that while we are talking with experts about tax and personal finance today, nothing that we discuss should be taken as actual advice. Okay, so if you have specific questions and needs regarding, the law, taxes, your personal finances, you really do need to consult with a professional. So none of this is advice. All right. We also might mention certain products or services or websites today, and we're just using them as examples to help you in your own personal research. So know that we're not endorsing any of these products, websites, or services. We're just using them as examples. So we're not getting compensated for mentioning them or anything like that. And then finally, all of us are based in the United States. So that means that we're going to be talking about things in the context of US taxes. That doesn't necessarily mean that it's not applicable if you are not US based. But just keep that in mind. That is kind of, our background and our expertise. But hopefully, especially if you are working with US companies, this will be still useful for you. So with all of that said, my name is Olivia Savage. I am a senior marketing strategist here at impact.com, focused on creator engagement. And I am thrilled to have two incredible experts in the world of tax and personal finance joining me today. And I would love to give them an opportunity to introduce themselves. So Caitlyn, why don't we start with you?
Thank you so much for that warm introduction, Olivia. Hi, everyone. I'm Caitlyn Kumi. I'm a content creator, I'm a founder, and I'm a marketer. I'm also a board advisor for impact.com, specializing in all things creator to make sure you guys have the best experience on the platform. A little bit of background about me. I've been doing personal finance content creation for about 2, 3 years. I've worked with a lot of great banks in the personal finance space. I've tried some of your favorite budgeting apps. I've tried some of your favorite tax prep software. So definitely feel qualified to speak on this and can't wait to share my gems here today with Nicole.
Amazing. Thanks, Caitlyn. And now, Nicole, please tell us a little bit about yourself.
Hi, everyone. My name is Nicole Green. I'm a senior tax consultant at Robert Hall and Associates. Robert Hall and Associates is a tax firm, and we do tax strategy. Before I was in tax, I was an educator, traveled all over the world educating people. And in the tax world, I do the exact same thing. I travel around doing webinars, going to conferences, and obviously educating my clients and all the different strategies that they can use to help with their own tax situation and to further their goals, because taxes are complex, but they're very fun and very, very useful.
See, that's how you know you have somebody very passionate, is when they say that taxes are fun. I
They
love it.
are.
I love the energy.
They are. I promise.
All right, well then let's get this party started. My first question is for creators and influencers kind of across the board when it comes to how much of their income actually comes from content creation. So Should a creator who is really only doing it part-time, maybe they're just starting out, they've got their first couple of brand deals, should they be approaching their personal finance management or taxes even the same as a creator who's full-time doing content creation, earning all of their money? Should they think about it differently, or does it not matter? I'm interested to know. Caitlin, what do you think?
I personally think regardless, you should treat content creation as a business. If you're still a corporate employee, obviously you have to account for those taxes as well. But I think when you're looking at the numbers and deciding, okay, what business structure makes the most sense for my taxes, I really think it makes sense to look at the revenue numbers and not just whether you're a corporate employee or like part-time content creator, full-time content creator. So usually, and we have Nicole here to double be our fact checker, but usually when you're hitting like a revenue point of beyond 50,000, beyond 100,000 in taxable income, they'll say 50,000, but I honestly think it's more like 100,000. It makes a little bit more sense to move from an LLC to an S corp. With the sole proprietor LLC, it's really a difference in like the type of protection that you want, where you're not as like personally liable. But I think that's where it really makes a big difference when you're considering what structure to get into for your business based on your tax needs. I think another big thing for creators to keep in mind is wanting to have their structure set up to maximize tax deductions. And with S corps, with LLCs, and even sole proprietorships, you still get certain tax deductions. Obviously, when you get to the stage of S corps, it's a little bit better in terms of what the offerings are. And I know Nicole will speak a little bit more to that later in the panel.
Yeah, I mean, I completely agree with almost everything that you said. It's you look at the amount of money that you have, but to determine how you can leverage your income that you have coming in for being a creator, and you definitely need to take it with the same due diligence if you're making 50,000 or if you're making 150,000. To be fair, I would even say you need to be a little bit more diligent if you're making the 50,000 because it's all going to be probably on your personal return. And that's where you're going to run into the most scrutiny is if it is on your personal return. And yeah, it's we say roughly the same thing. You know, it's about $40,000 of profit before you switch from an LLC to a S corp, and so that kind of does run around about $100,000 of revenue. Revenue is before expenses, right? And so, like after expenses, because of business, any type of business is going to have anywhere from 40% to 60% expenses. And so, content creators are usually a little bit on the lower side, around 40, because you're working from home or you're working, your expenses can be quite minimum unless you're a travel content creator. And those content creators definitely run a little bit higher in the expenses. So, but yeah, around $40,000 or $100,000 of revenue is a great time for you to switch because the cost switch from LLC to S corp because the cost of having an S corp will be absorbed by the tax savings that you have. So,
Question. So for let's say a creator is earning less than 40,000 a year. Let's say they're earning, 1,000, 2,000. It's like, they're just starting out. Should they already be considering an LLC, or is filing as a sole proprietorship without that protection like sufficient if like the monetary earnings are low enough? I'm interested to know.
so the difference between sole proprietorship and LLC is it's going to be a difference of legal thing. If you're an LLC, single member LLC, or you're a sole proprietor, on the tax side of it, it's the exact same. You're going to be doing a Schedule C. It's going to be on your personal return. When your Schedule Cs are the most highly audited type of entity, and so that's where you need to have the most due diligence just to make sure that you're doing things correctly. Make sure that you're still separating your personal expenses and your business expenses. If you're doing this as like a side thing, whatever, there's no reason why you don't have your own bank account for it. Like separate those expenses. That's going to be the biggest key thing for you to help you understand, hey, I do this for business. Hey, I do this for personal. because a lot of times you can get people saying that my whole life is business. And while I get that, because you do incorporate a lot of your business inside your personal life, you still have a division, and the IRS and the state tax agencies still require you to have a division. And content creation is a wonderful, great field, but it's not a new field, and the IRS doesn't look at it as like, oh, you're this avant-garde type of situation. No, there's laws. No, there's rules on how to manage it. And so you need to conform with those types of things, and separating your mindset and separating your bank account is a really, it's like the first step to going like, okay, this is business, this is personal, to make sure that you're set up in the best type of way, regardless of how much income you have.
Love that. Yeah, I remember that when we were chatting before the webinar, both of you had said, have a separate bank account. It's so important. And so I'm sure we'll get into more of the nitty gritty, and please feel free to repeat that. Let's beat that drum, because I think that's a really, really important thing. If you only take home one thing today, like, I feel like that maybe is like the number one foundational piece of information that folks can really use. But let's extrapolate from there. So, I feel like for a lot of content creators who are just getting started, they don't even necessarily know how to get organized, where to keep things, how long to keep things for, stuff like that. Especially if you're really young, maybe you haven't filed your taxes, your parents were helping you out with that or whatever. So I'm interested to know, Caitlin, especially since you operate on the creator side a lot, in addition to owning your own business, are there any like tools, templates, just like, even if it's a freebie kind of thing, are there any best practices that you think folks should maybe take a look at and consider implementing from the get-go, so that they're well organized for the next tax season and beyond?
Yes, and there are like two recommendations I have, and it really depends on personality type and your accountant, and what their preferences, or even if you have a bookkeeper. So I'll share what I do, and then I can share what some of my other peers in the industry do as well. So I do everything through my business bank account. And then I also take the time to familiarize myself with what are the tax deductions I'm eligible for as a content creator. So as I'm making spending decisions for my business, I can account for that. And then usually, like every month, I'll go through my expenses with my accountant. If they're confused about where it's categorized, I'll clarify, because sometimes that random business dinner you had a few months ago, it just has a random name and they're like, what is that? And you have to provide them that color and background context. I find doing it on a monthly basis, sometimes a quarterly basis, so I'm really swamped, is really helpful, because there's nothing worse than like come like end of year, like January, December, February, whenever you do your taxes with your accountant and you're like, what was this expense 7 months ago? Like that's not very fun. Another thing you can do is work with a tax prep software. There's QuickBooks. H&R Block also has a service as well, where you can work with like their tax planning professionals over a duration if you're a small business owner. Disclaimer, I have worked with both brands in the past on partnerships, but that's just not like a formal endorsement. They're actually like good products, based on my experience working with them. So that's also an option as well as working with an independent provider. I will say the biggest thing though is content creation is a very new business, and just really making sure your accountant understands that it is a business, where things would be eligible for tax deductions, because they might be a little bit confused. So I would just say if you can go to like a subject matter expert, or if they're just at least familiar with the field, I think that helps a lot, as you're prepping your taxes. But I think the best thing you can do as a creator yourself is actually know what you're eligible for as a creator as it pertains to your business. So you can invest and grow and get the most out of the tax deductions, because living in the US, our tax system actually does favor business owners.
Any additional thoughts or other context that you'd like to add, Nicole?
Yeah, I would tell people to relax. I tell people like it's not an incredibly stressful type of situation. You don't need to labor over each individual expense. If you're using it for business, if you're using it for business, you will be able to count it as a deduction. Will you be able to count 100% as a deduction, or partially as a deduction? That's all going to depend. But if you separate your stuff, you're okay. You can just breathe, exhale. You should go through your bank statements. You should reconcile once a month for your own self. You need to understand, how much money am I bringing in versus how much money am I expending? Because just like the IRS or anybody, if you're not making a profit, it's not really a business. Like, what are we doing here? Like, it's going to become a hobby, and after, depending how you're structured, after a certain amount of years, the IRS will deem it a hobby. And so, like, you need to know your finances. The worst thing I see is when people come to me and they're like, I didn't get all of my 1099s, and so I don't know how much income I have for the year. I know that the few that I have is not right. I know there's more. And I'm like, how do you not know how much income you have? How are you relying on somebody else to tell you how much income you have? Like, no, you need to know how much income you have. And if you have your income coming into a separate bank account, you're going to be fine. You're going to know. You can just easily look at the deposits and go through. Working with different people is based on how much stuff you have, how much money is coming in, how many transactions you have, because a lot of times people can do it themselves. You don't need to go to a bookkeeper, because you want to. I'm very much into that whole, like, let's keep the money in your own pocket. You can have all the tax savings and all that stuff in the world, but if you're expending it on a bunch of other stuff, you're still out money, right? Like, we don't want to be, we want to keep it in our own pockets. And so you need to look to see, where is it reasonable? How do you like to do things? What level you're at? Because not everybody is at the level where they're going to pay, $500 a month for a bookkeeper. Like, people aren't always there. There's many tools out there that you can use. Your banks even provide tools for you to do a actual summary of your statements and stuff. QuickBooks is a wonderful, wonderful, wonderful service that people can use. There's just a lot of them, like Quickens also out there. There's just so many different types of services. I have clients that just use straight Excel sheets. And then I have clients that also have, great, amazing bookkeepers, which I do love. I do love the good bookkeepers.
Yeah, and I think there are a couple of nuggets in there that are worth considering. If you're somebody who tends to put receipts in a bag, like me, um, maybe having an actual service like QuickBooks or something where you can take pictures of receipts on the fly before you forget about them, that might be a really good reason to invest in a tool like that. Whereas if you're really diligent, really on top of it, and an Excel spreadsheet will work for you, which has no additional like out of pocket cost, cool. But I think it's worth considering like what your process is, what will work for you and what won't, and then prioritize that in your budget, because it's so important that you have this locked down, because you don't want to be scrambling if an audit were to happen, right? And then another thing that I remember both of you had said when we were preparing was not just to keep your finances separate, but to actually have a separate business bank account. And I'm guessing that some of those, depending upon the bank or credit union, would have some tools to better help you understand what's coming in and what's going out, like you were talking about, Nicole. So I would say, as you are considering kind of getting yourself set up for success, maybe shop around, find out if your current bank or maybe another bank in your area will better meet your needs when it comes to inboard tools that can give you insight into some of those things that we've been talking about.
I
um,
completely agree with that. That's a very good statement. And because you can start with one bank and then you can change, you can grow. Like, you can start with one structure, you can change, you can grow as you get bigger, as things evolve with you, when your priorities change. Like, the biggest thing I see people doing is stressing out and thinking that each little transaction is not going to be counted, or like going crazy. And I'm like, taxes, this is fun, relax.
I'm going to quote you forever on that. Love it so much. When my husband, because I make him do our taxes when it comes around, I'm going to tell him, no, it's fun, I promise. um, um, Let's talk about deductions. I saw a couple of questions coming through in the chat, and we will have a more formal Q&A at the end, but it's already on my list, so let's jump to it. Let's talk about common deductions that creators often take that, should folks should keep in the back of their mind if they are purchasing these products or services. And then also maybe a couple that are like outside the box that folks might not have realized, like, oh, that might be applicable to me if and when. Caitlin, I know you and I had chatted about this previously. Do you want to kick us off?
Yeah, so I'll just use myself for example. So I have to sometimes take Ubers to events. I live in New York, so I don't have a car. That if I'm taking that Uber to a business event or a networking event for my business, then that would be a qualified deduction. Sometimes I have to hire makeup artists when I'm doing paid ads. So that would also be a deduction. Sometimes I have photographers for my events. I actually had to purchase a camera for my content creation that I use to create videos when I create ads. So things like that are often common tax deductions that we don't think about. Another big one is the home tax deduction. So if you have a place where there's like a separate room that you're using specifically for business, you can take a portion out for a tax deduction. I will say though, again, I'm not a qualified tax accountant. If you live in a studio, probably wouldn't recommend because of the audit. Not that it's not possible, it's just a little bit harder to prove. But again, like for questions like that, depending on your situation, like I think it's really good to talk to a certified tax expert because I wouldn't want you to get an audit if you're trying to get a tax deduction and you live in a studio. Um, Nicole might be able to speak to that. It might be possible, but I would just say be careful when it comes to things like that.
Yeah, you're 100% correct. Like there's no. It's not you can't do and there's like 100% no, you can't take it. No. It's going to be proportional, right? And so if you're saying I want to do business use of home, I have my own business and I'm using part of my home and your home is only, I don't know, 400 square feet, it doesn't make sense to say that all 400 square feet is used for business. So maybe you're not going to be able to use all of your rent as a deduction. You can make the claim that maybe, I don't know, a fifth of it or something like that. But it's the same when you have, a 3,000 square foot house. We're not going to say the 3,000 square feet is used for business. It's all going to be proportional. And it's the exact same way with deductions, right? It doesn't make sense for me to say all the clothing I purchased in my full year was used for business because I'm sorry, when you were sleeping, you were in clothes. Like that's not business. Like you are asleep. And so that doesn't make sense. It's proportionally, even if you are a content creator that does clothing and lifestyle and you're still going to have some personal expenses and some business expenses, even though your life is your business. I get all of that. And I like people to think about it as there are bad deductions and then there are good deductions. Bad deductions don't mean zero. It doesn't mean we can't take any of them. You just want to be a little bit cautious with those deductions. And those deductions I've coined as things that go in your mouth and on your body. Those are just generally highly scrutinized deductions that have a lot of like, excuse me, like, because they're genuinely personal, right? People need, again, clothing, people need food. And so you want to be a little bit cautious. I remind people that the military does not get to deduct their haircuts, even though they're required to shave their heads or buzz cut, whatever it's called, their heads. They still do not get to take that as a deduction. Why? Because it's inherently personal. Like it's on your head. It's yours. Like you're going to use that. But it doesn't mean you can't say that, oh, I had to get my hair styled for this shoot, so I can't ever take that. No, you can totally take that. But you all of your hair, like, it's you definitely want to be kind of cautious about those things. But electronics are great deductions. Travel is an amazing deduction, especially depending on how you're set up. If you're set up as a corporation, it's a really, really travels one of those really huge deductions. Equipment is a great deduction. And then also You have to think your Netflix, your internet, all of these types of things. You might not be able to include all of it depending on how you're set up, but those little things putting together are really, really good deductions. And so I remind people, think of it as a business, regardless of how much money you're making, and you're using that business. What are you using for that business? Am I using my lights for that business? I can take part of that. Am I using my car for that business? I can take part of that. And so you just need to remember that it's okay. You can take your deductions. You just need to be conscious of it because it makes no sense if you're bringing in, let's say, $10,000 gross before expenses. You're bringing $10,000 and you're trying to say $30,000 of expenses. That makes no sense. That's not a business, right? Like fundamentally, that's not a business. Like businesses turn profit. So it doesn't really make sense like that. But if you're bringing in, $10,000 and you're saying 8,000 of it is going to business, okay, let's talk about what we're getting in and things like that.
Quick question for you. I remember when we were chatting previously, you had talked about how folks can also consider, like, if they are getting gifts, for instance, like if you're a travel influencer and you are taking a luxury trip, obviously there is some magic that needs to happen there to figure out how to appropriately claim that as actual income because you're the value of that might be way, way outside of like really like your lifestyle or what would be appropriate for you to say you are, actually earning. So I know we said I had asked, should they like go by the website list price for something that is gifted? And you were like, absolutely not. And that there are other ways to kind of calculate that. So could you refresh my memory and share with everybody kind of your thought process behind that and some other things people should keep in mind?
Yeah, so there is a difference between getting a gift as like versus getting something that you're receiving in terms of trade, right? And so if somebody is giving me, I don't know, a car, and I'm getting this car, I'm not required to post, I'm not required to do anything about it, then that is just a genuine gift that I am receiving. If I am receiving something in return for something else, then that is going to be a gift. And if that is the intention, then you need to count it as income. And this is why I say that there's this is not a new industry because in the early 2000s this was a really big things with the Oscars and the Golden Globes. You can look up articles about it, and the IRS made very clear destinations of this exact thing because people at the Oscars and the Golden Globes and the Academy Awards and all this stuff, they receive lots of things, right? And those gifting suites, right, they're receiving a lot of those things because they're doing it in turn for the promotion. The companies are doing it in turn for the promotion. And so they required now those companies to 1099 those people, and you're going to see that a lot happening towards the end of the year, especially when you get to a particular level. This is definitely a certain level type of thing, and you'll see that as you get bigger and as more income is coming into you in different types of ways. Income doesn't just necessarily mean cash. Like if I'm doing a job for somebody and they give me Bitcoin, or if they give me, I don't know, euros, it's still going to count as income. And so just if I'm doing something for someone and they give me a car for in an exchange for it, it is still income. Income is not defined by dollars, like, right? It's defined as in terms of trade. And so if you're receiving something for it, you need to count that value, but that value might not be, I wouldn't use that value as a consumer rate value. I wouldn't say like, okay, I got this shirt in term or this sweater or whatever, and I need to post about it, and like I'm gonna go Google what that sweater is. No, because there is a depreciated value of that item. And so, one, you can use your services as an exchange. You can look at your rate to see whatever your rate is, and you can deem it like that. So, if somebody is saying to you, like, hey, I'll give you this for this, well, what's my normal rate? So I can count it as that. Um, You can also ask them what their deemed value is because they are taking it as a deduction. They are 100% counting it as the deduction. And so they're going to count what they gave you as a deduction so they know that value of it. The worst thing ever is when people are going ahead and doing their taxes and they count their income and da 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 da. And then 5 months later, they receive a 1099 because that company chose to do 1099s a little bit late. They paid a little fee, but they started to 1099 people a little late, and then you didn't count that income. That company paid a little bit of a fee for 1099 people late, but you're going to pay a whole bunch more if for not reporting all of your income. When you don't report all of your income, the highest penalty is jail. But like, I mean, that's how they get all the criminals that they can't actually get. Like, is they get them through not reporting all of their income. And so it's really, really important that people in this industry, and this is the same rules that apply to everybody else in entertainment, everybody else in communications. You are in that same industry. While it's a new platform and all of that, you still fall into those same codes. And when you create your businesses, you identify what you do as a business. You say, hey, I am doing content creation. And if you look at the actual codes, it's under entertainment. And so they know what the average is. They understand what you should be bringing in and what you shouldn't be bringing in comparison to your expenses. They understand because they have a lot of data from all different parts of the country coming in, say, like, hey, this is how much it is. And so when I say they, I mean like the IRS or the state agencies, they know what it should be in proportion. And so if you're directly having, you know, $50,000 of expenses, your income should be reflective of that as well.
Yeah, absolutely. Caitlin, how have you kind of dealt with any, gifts in kind experiences or like, stuff that's given to you in exchange for creating content? Do you have like some sort of rate that you do per piece of content or per hour? Do you do a mix of that and actual product or experience value? What's your approach?
I really try to avoid having contractual obligations with gifting and limiting it, but personally, just because it's quite wasteful. So I try to be very intentional with that. And then I'm trying to think, what was the second part of the question?
Just like, have you created some sort of like rate if that is like, let's say somebody pays you to go on a trip or, they gift you a piece of clothing, like a really expensive gown or something for an event. Do you calculate the value of the item in some way, or do you just kind of have like a flat rate that you are using as a, to claim that income, like Nicole is kind of alluding to?
I I usually just do a flat rate.
Okay. And how
That's
do
the
you
easiest way I would say is a
I
flat rate. And it's really when the big thing is when people are gifting very expensive things for you. That's when you really see it. I think it was like that 90 day fiance guy that he got in really big trouble for not claiming trips. That is, it's those types of things, those really like lavish types of things that people get kind of issues
yeah.
with.
And how do you go about calculating your rate? Like, you don't have to tell us the number, but like, is it platform follower size? Do you lean on your management to guide you as far as how to determine what that number might be? I'm just curious.
Yeah, I'll be honest, I really put it in the hands of my accountant.
Okay.
I wish I was a little bit more, in the weeds of that, but, like, there are certain things where, um, I really, like, hone in, but because I'm, like, truly afraid of an audit, I, like, really lean on, like, professional expertise. Of course, I know, like, high level, like, what the deductions are, basics, like, if I have, like, clarifying questions, but, um I know, like, Nicole is definitely, like, a really big proponent of DIY. I'm a little bit of the opposite. I think, like, as you, like, scale, like, you really need to be intentional and think about, like, where you wanna delegate, and for me, when it comes to, like, tax planning, tax preparation, like, I really lean on, like, outsourcing. That is one of my, like, first preferences. Just simply just because there's other things that I wanna put a little bit of time and energy into growing my business, but then there are some people who really enjoy, like, the personal finance, like financial planning aspect when it comes to taxes. So I really do think it's a personal preference. I just want to be transparent. As my business started to increase, I was like, how am I less in the weeds?
Oh, that makes perfect sense, and I think if that is accessible, that's probably advisable, for a lot of folks, especially if you are, if your business is growing very rapidly. I think it's going to become exponentially more difficult to manage that stuff yourself, and so that would probably be a sign to you that it's time to start researching and investing, in a professional team to help you. And in that vein, what should people be looking out for? Like, what, in your experience means that a bookkeeper or, a tax representative is trustworthy and, worth your investment and your time? What do you look for?
I think, like, the way in which they advise you depending on, like, what stage you're in. So, like, if you listen to Nicole in this presentation, notice how she said if you're making, like, 10,000, like, I would not advise trying to write off 30,000 in expenses, like, maybe take 5,000, maybe take 8,000 qualified tax deductions to minimize your taxable income. That would be like ding, 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 green flag to me. I know even sometimes, like, when I meet with my accountant, they're like, "This is not a hobby." Like, I remember my first years of business, I was like, "I've seen the videos online. How am I gonna pay 0 in taxes?" They were like, "No. Would you like an audit?" And I think it's really good to have someone who holds you accountable, who's like, "I'm going to make sure that I reduce your taxable income as much as possible, but I want to make sure that you are in the best position not to put yourself at risk from a legal standpoint." So for me, I really look for that. And of course, there are things like character. I also go through like referrals and recommendations through a friend. There are like the bigger companies like an H&R Block. Of course, they are like, a standard like company, so sometimes it is good to go with a more like personalized, like tailor approach, but at least with them being such like a large entity, there's probably a little bit more like vetting and scrutiny. So I would probably, if I'm starting out, go with recommendations from like trusted sources, friends who have used them not just for like 1 year, but maybe like 3, 5 years. There's no history of audits under their work, or just exploring maybe like an H&R Block's tax advisor service.
All right, but we have somebody here from Robert Hall. So, Nicole, tell us a little bit about how and why your company and your services, especially, are valuable for creators and influencers, entertainment folks in particular.
Well, I would first say that there's to every business, right? And so a lot of the stages really are based on your income. Like that's just a matter of fact. Like I love talking about tax. I don't mind talking about tax. When people find out what I do, it's just like attorneys, doctors, mechanics, and accountants. When you run into them, you're like, "Oh wait, can I just ask this really quick question to get some free advice?" And so, like, I genuinely love it. That said, first question I always have when somebody tells me their situation or like gives me whatever their question is, I'm like, I'm sorry, I need to know how much. How much money are we talking about? How much income do you have coming in? How much profit? I need those numbers because that's going to determine absolutely everything. And so you can do a lot all on your own, but after a certain point, you need to graduate to different levels. And there's very different levels of accountants, right? You can obviously be doing it all on your own and maybe turbotaxing your life. You can move up to like an H&R Block. I don't know. I kind of put that in the TurboTax realm because not they don't have to be licensed or anything at H&R Block. And so then you can keep going up to more licensed people, but it's not cheap. Like it's not cheap. And so you need to have the value for it. And what my company does is we offer free 30-minute consultations, which for sure anybody here is more than welcome to have them. So that one, we can see where we lie with the clients, also so that people can get free access to people and just generally ask questions. Robert Hall was started by educators. I used to be an educator. And so we believe the more education that is out there, because America, the United States, and financial literacy is just we're on that struggle bus so bad with it. And so it's a lot of, oh, I heard my mom, my dad, I saw a TikTok, they said I can deduct, da, da, da," and like genuinely these TikToks and these people going out there, they might be correct, but it's all situational. Like, yes, in this particular situation, you can deduct your entire car, but also that was 2 years ago, and now that law has changed, and you can't no longer do that. Or maybe because you didn't bring enough income, there's no need to do that. Or because of what you're planning, it's better if we take it slower. There's so much more to it. The tax code is thousands and thousands and thousands of pages. There's no way that your 30-minute conversation with your uncle's friend or your 30-second TikTok is going to give you enough advice and give you enough information. Not that I don't have anything against like TikToks and all that stuff, because I love my clients coming to me and saying, like, hey, I saw this. Does this apply to me? And I'm like, actually, it doesn't, because we're working with this strategy. Uh, we really strive for people to understand that their tax return is not this negative thing for them. If you take some time, it is a tool, and you can advance so much of your life with this tool. You can have this side hustle that you're not really making a ton of money at. Sorry, but sometimes that's how it is in the beginning. You're not making a ton of money, but that side hustle can actually help lower your tax liability with your other income, or your spouse that's a stay at home, whoever, can actually be a really great benefit on your tax return, so that now you guys can save some more money by saving taxes so you can further your goals. And when we start to sit down with clients and stuff, we will always ask, what's the goal? What are we trying to do? Everybody's trying to lower their tax liability, obviously. That's a given. But there's so much more you can do with your tax return. Because if you're saying, hey, I'm trying to get into real estate, I want to, fill up my retirement, like, there's different strategies that we can go about that. Because some people will say, like, oh, well, you can only put $7,500 into a Roth IRA. And so that's all I'm able to do. And I'm like, no, you can put up to like $70,000 into a Roth. I can show you how. It's not matter of you understanding your tax returns. It's a matter of you saying, what are your goals that you want to do? And then somebody can show you how you can do it, because your tax returns follow you for years. Because to be honest, if you want to lower your tax liability down to zero, I could do that for you. I absolutely can. But if you're trying to buy a house in 2 years, I just screwed you. And like, that's not what we're trying to do. We want your goals to happen. And so maybe for your bigger goal, we're going to pay a little bit of tax, and then we can have this bigger goal. But you got to find like that balance of, well, how much tax do you want to pay, and how much do you really want these other goals going on, because they should go hand in hand. And there's definitely a difference between people that don't pay any tax and people that do pay tax.
100%. I love that. Really, really great. Couple more really quick questions before we get into the Q&A. How long should creators keep financial records like invoices and receipts in case of an audit down the line? Fingers crossed not.
Yeah, so you should keep your stuff 7 years. Genuinely, you should keep your stuff, and you should make it really easy for yourself. In today's world, electronics is like a thing. You all have your phone, take a picture, throw copies of the receipts into a Dropbox, into a drive, label it for the year, leave it at that. You do things electronically, so that we're not doing things in cash, making sure there's some sort of electronic correspondence with it, whether it's an email, whether it's a text message, where you're stating what is being purchased, how much is being purchased, and when it's being purchased. Then throw that into a drive, never think about it again. It's not, taxes are not the most complicated, craziest things. You can make it really simple for yourself. But you do need to understand that you're not getting audited in 2025 for things that happened in 2024. It's just very much like the COVID stuff, the COVID income that came into people, like PPP loans and things like that. The government gives out money all the time. They give it out. They say, you want to take that deduction? No problem. Great, 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 great. It's going to be several years later that they're going to go, excuse me, let's have a little chat about that. And so you just need to make it really simple for yourself. Don't overthink it. Don't stress it. Take pictures, throw those things into drives, and like forget about it.
Yeah. Okay. Love it. 7 years, uh, theoretically, and as easily as you can. And Caitlin, how much of earned income from content creation would you recommend your content creator bestie set aside if they didn't have a bookkeeper giving them advice about it for tax season?
I usually try to do about 30%. Sometimes if you're like a little bit more conservative, you can do like 35% just to be safe. But I usually do about 30%.
All right. Love it. Okay. Now it is time for the Q&A. I see we have a few in the chat and then there are also some in the Q&A. I'm going to monitor both, but if you guys have additional questions you haven't already asked, please use the Q&A area. It's just a little cleaner for me to look at. Um, so first question we had, at the very beginning, we were talking about S corps versus LLC. And somebody wanted to know, is there a fee to get an S corp? And are there any like benefits? I guess probably financial is my guess, to pursuing an S corp versus an LLC.
So yes, there are fees for S corps, and there's fees for LLCs, right? I'm here in California, and so California, your LLC, whether it's a partnership or any type of LLC, is going to run you probably roughly about $1,200 to $1,400 a year just to maintain, while an S corp is going to run you about $3,400 a year just to maintain here in California. California is a little bit more on the expensive side. If you're in a different state, you can see it cheaper, but still there is going to be a fee because S corps are going to be a different return, right? And so somebody is going to charge you for filing that return. You also, if you have an S corp, you're required to run payroll. Any S corp, it needs to have a reasonable salary. Any owner of an S corp, officer of an S corp, has to have a reasonable salary if that S corp is turning a profit. And so that payroll service that you're going to need to pay, all of that kind of combined is where I get that $3,400 a year. If you're in a state like Florida, it's going to be more. It's going to be more like $2,700 a year. Texas is going to be more like 28. Like blah 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 blah. But they all run separate fees. And so this is why we say about $40,000 of profit, you're going to see the tax savings take over that extra expense, because when you have an LLC, you have self-employment tax on 100% of the profit, while S corps, because you're required to run a payroll, that payroll tax, which is basically the same thing as self-employment tax, is going to limit there. And so that's where you can see that savings is with this payroll tax. And so around 40% or $40,000, you will be able to see the savings. And so you can definitely decide then. If you don't know how much income you're going to bring in this year, if you're like, I have no idea what it is, but I take this business seriously and I do believe that I can have $40,000 of profit, not gross, $40,000 of profit, which is roughly going to be anywhere from $60 to $100,000 of gross revenue. Maybe it's a good idea for you to start an LLC, not a sole proprietorship, but an actual single member LLC, because your accountant can retroactively change you from an LLC to an S corp when you've done that. So like I mean today in 2025, March 18th of 2025, I can change my client who has a single member LLC in 2024 to an S corp for the full year of 2024. And so that allows people to get that savings in there if they don't know kind of where they land, but still keeping the expenses minimum, because I really strive for people. Keep your expenses down, keep the money in your pockets as much as you possibly can. Don't go crazy.
Yeah, I love that idea. Wait, you don't have to do it at the beginning of the tax year. You can wait until later, and see where you're at before filing. Great advice. Or not advice, great information. Um, if I already have a business and I'm making money for content creation as well, should I have a separate bank account for my personal, business, and content creation?
I'm gonna say it depends what that business is, but most likely, yes. You can't combine businesses on the same entity structure. So, meaning I can't have a hairstyling company and also a real estate inside my S Corp. I can't run those together. And the reason that is because you identify, as I said earlier, you identify what that business does. There's special codes that you use, whether you're a single member LLC, whether you're not structured at all. There's no entity structure. You still identify what you're doing. And based on that identification that you do, the IRS is very simple. They just go and average you. They say, hey, are you the norm? Because when you're taking your deductions, they're required to be ordinary and necessary. And that first one is ordinary, meaning are you average? Are you the regular type of person? And if you're not ordinary, that's when they're going to come around and ask questions. And so if a real estate agent is going to have a lot different expenses than a hairstylist is going to have, and like in terms of how much, like real estate agents can have a ton of travel, right? You're gonna have a ton of car expenses, you're gonna have like gifting, things like that, while maybe a hairstylist is going to have more equipment expenses and more supplies than a real estate agent would definitely have. And so they're going to look to see proportionate. If somebody's bringing in this much money, these are the types of expenses, and this is the ratio that those expenses should be. And so, yeah, I would definitely separate your bank accounts. I mean, there's nothing wrong with having two or three bank accounts.
Yeah, absolutely. Um, can we talk a little bit about estimated taxes? Is there a threshold as to when they should be paid? I think I know the answer, and you guys correct me if I'm wrong, but I believe it's about $600, right? 600 is the threshold where you need to like actually go through with it, or is it is it $1?
So, estimated taxes are done as a couple of things, right? It is essentially the government not wanting you to have a big bill at the end of the year. After $1,000, you're going to start seeing penalties, and you're going to see penalties for not prepaying your tax. You need to prepay your tax by the end of the year, not when you file. You'll start to get penalties December 31st if you're not paying your entire tax. However, depending on how you're structured, can eliminate that requirement. If you have an S corp, when you run payroll, it'll take away that requirement to have that quarterly estimates made, and you can just pay it at the very end of the year, because the government is looking for it to be done quarterly. They don't want people paying lump sum even on December 31st. They don't want that. They want you to make regular payments. And it's, think about it, if somebody owes you $10,000, would you rather them wait to the very end of the deadline and just give you the $10,000, or would you rather them give a little bit of money throughout the year? Like, I would much rather somebody give me a little bit of money throughout the year, because I know they're going to pay me back. Like, I know they haven't forgotten, right? Like, and that's the exact way the government looks, because it's much harder to collect 10 grand from somebody than it is to collect $1,000 from somebody.
Yeah. Um, and when it comes to actually hiring like a tax expert or a bookkeeper, an accountant, how does the cost of that service, like how is that calculated? Is it a percentage of your gross income? Is it on a per hour rate? Like I think people are trying to understand how much it might cost if they're looking for somebody based on their own circumstances. And I'm sure there's no hard and fast rule, but if there's any idea we can give folks, I think that would be useful.
Yeah, it varies. It varies in the level of service. I'm going to tell you, you get what you pay for, very much. And you should make sure that you know what you want and what you're actually able to get out of. We here at Robert Hall and Associates, we do things based on what we do, not based on time that it takes us to do it. We're not on an hourly rate, unless you're on an audit, and then we're going to go on an hourly rate. But we like to identify there's different levels of people. And so, like an ideal client for us is going to be, we love content creators, we love new business, we do small and medium businesses because we love to explore what people can do in the tax codes. I'm not a fan of staying on page 1 through 10 of the tax code. Like, I want to get down in there. I love to help people, further their goals. I had a client the other day that said to me, Nicole, remember 2 years ago, I told you I wanted to buy some rental properties, and now I'm buying my third rental property. And I'm like, yeah, and you did it all with tax savings. So you didn't need to throw any new money in there because you actually had communication with your accountant to help you understand that we can make this happen. Or, sometimes I do tell people, like, that's a lofty goal. We can maybe, need to expand it out there and things like that. But to be fair and honest, like, we're not the cheapest company that is around because we do some really good things and we do a lot of great savings. And sometimes I literally have to tell my clients, it's not really worth it for you to come to me right now. You should wait until you're showing an actual difference. And so we can go ahead and have some fun and we can go ahead and do some really good things for you. I've sent people back to TurboTax several times and I'm like, when you hit this or when this happens, when you're purchasing this, then come back. And it makes sense because I don't want you to be wasting money on me that when I'm not doing nothing.
Yeah, absolutely. Caitlin, do you have we're almost at time, but I wanted to give you a chance to add any additional tidbits or thoughts before we kind of close out.
No, I think we hit on a lot of the key points, and similar to what Nicole said, I think it's really important to be honest about where you're at and the type of support that you need. Because I think your support when you're making like under 50,000, like I don't think you necessarily need all of the, expensive like tax experts, but like when you start to get into like 100,000, 500,000, a million plus, like I would not be doing your taxes. Or at least I know I won't be doing my taxes using like a TurboTax or like another provider, just because you're really missing out on maximizing like your tax savings. Like there's so many deductions, there's so many ways in which you can structure your entity. And also too, like I think the risk can be like higher sometimes. So um I would just really be intentional with like thinking about what your tax plan looks like. And again, like I mentioned, no matter whether you're in the early stages or late stages, sitting down, having that 30-minute, hour long conversation with your accountant, with your tax planning professional. Because I think as you're like making those decisions like throughout the year as well, because like you will probably have some taxes to pay, some people pay zero, but you probably will have some. You don't want to be in a position where you're thinking like everything's a deduction. And then now like you're not showing as much profit and now you have a huge hefty tax bill. So that would be my advice.
Before we sign off, I did just want to let everybody know that in Austin, Texas, from June 9th to 11th, we are hosting IPX, our longstanding customer and partner event. And this year, we are opening it up to creators. We are hosting content that is specific to creators and the creator economy. We have a dedicated track that is creator facing content, and there's just a ton of networking opportunities because we'll have usually about 500 brand attendees, about 300 publishers, and about 100 agencies all attending. Right now, the tickets are on sale for $99, and I have a special code for you all to get an additional 20% off. That code is Creator20, all caps. The prices are going up to $129 on April 1st. That's not a joke. I'm serious. So go ahead and get your tickets now. If you have any questions, you have my email. I'll also send a follow-up email so you can reply to me for that. Otherwise, thank you all so, so, so much. You can